Hey folks, thanks for tuning in. Today I wanted to talk about 3 significant changes to mortgage rules that came into effect recently. I know I've talked a lot about mortgages in previous videos, but this is one of the most impactful topics affecting the current real estate market. So the first change I want to talk about is regarding insured mortgages. Under the previous rules, the maximum mortgage amount for insured mortgages was $1 million. This amount has now increased to $1.5 million under the new rules. Insured mortgages are required for those putting less than 20% down payment and therefore require insurance from their mortgage from the CMHC. The second rule change I want to talk about is around amortization. The government has recently announced that they will increase amortization periods for first-time home buyers from 25 to 30 years. Under the previous rules, first-time home buyers who are buying newly built homes only could get 30-year amortization. Under the new rule, this applies to all home types. Now this is a bit of a catch-22. Yes, your mortgage amount will be lower with a 30-year amortization versus 25-year amortization, but it is also of note that during that 30-year amortization, you are paying 26% more interest. So you're paying more towards your interest and less towards your principal. So depending on the mortgage product you do have, and if you read the fine print, you may have lump sum privilege or prepayment privileges. So if you're looking to have lower monthly carrying costs at the beginning of your mortgage and you're expecting that more money will be coming down the road, you could go down this route and then pay a lump sum with your prepayment privilege amount. So you really got to weigh your options here and see what works for you, but you are able to now, as a first-time home buyer, extend your amortization to 30 years. Now the final rule change I want to talk about is around the stress test. The stress test requires federally regulated banking institutions to ensure borrowers can still make mortgage payments even if interest rate goes up and their cost of living goes up. So under the previous rules, a stress test was not required at renewal, only if you were staying with your existing bank. Under the new rules, once you are at your renewal and you want to keep the same mortgage terms, etc., and you're moving to a different bank, you no longer require a stress test anymore. So that's good news and gives you some options to shop around your mortgage at renewal time. That's it for now. Thank you so much for tuning in. We'll chat with you soon.